Have you ever heard of the concept of a bubble when it comes to investing? That's what I'd like to talk about a little bit today, especially as we're seeing maybe a lot of demand and interest in certain asset classes. Maybe one might say cryptocurrency in particular, and even more specifically, Bitcoin. But what kind of comes to mind for me is concerns of a bubble and like what makes for a bubble and whether or not cryptocurrency and the interest that we're seeing in cryptocurrency has the makings for a bubble. But before we get underway, be sure to sign up to our newsletter, folks, or subscribe to our channel, or also follow us in our social media. We'd love to have you deepen your engagement with us. So, what makes for a bubble when it comes to investing? A bubble is fundamentally where an asset gets hyped up beyond and in excess of its true underlying value. And like one of the challenges we have in all investing is knowing what the right price is in relation to the value that we're receiving for the investment. And are we paying too much? Or are we paying too little? If you listen to my video, a few weeks ago on buying low and selling high, we're wanting to buy assets when they're underpriced and sell them when they're overpriced. But not just we want to do that. Like everybody is out to do that, and so that makes for a very competitive marketplace, which makes it difficult to know, is the price correctly associated? But that would be in a fully functioning, rational market that we would expect that sort of activity to take place. And as much as human beings are rational, we're not fully rational. We get emotional and we get excited and we start to hype things up. And so there could be pushing in terms of a price that someone's willing to pay for something because they so strongly believe what this may do for them, really in terms of financial reward. They're wanting to make money on it, and they think this is like a sure bet. It's going to make us lots and lots of money. This is the next thing. We're all going to get rich. But that just pushes that price up. It's a supply and demand effect to a point where at some point the price starts to get to be a little crazy. We have what's called the greater fool theory, where this price push going higher makes sense up until a point, until as long as there's another greater fool. Like that's like what the greater fool theory is all about. As long as there's another greater fool who's willing to buy the asset from you. And I would keep in mind that in all of this, there's always a buy and sell. Like if there's two people on the side of this trade. So someone else, if you're wanting to get out of a position, especially if you're wanting to sell at a really high price and you're making a ton of money, you have to convince ultimately somebody else that this is a good deal and they should be getting in on this position and this is a good price to get in on it. And so bubbles are just this focus of things getting more and more excited. And they'll continue to do that, and they may be able to persist for a long time, but they have a tendency in the history of the markets to eventually pop. And the reason why they pop is at some point, somebody says, there's no other greater fool. Like you can't convince somebody else to sell the asset to, because like everyone's like, you know what, I don't know. I don't know what's going on with this thing, but it's just getting to be too dang expensive and I'm out. And usually when it's like that starts to hit, it goes bam, the price will drop dramatically. And everyone kind of just realizes that we were all of us just participating in this asset class, thinking we were just going to make so much money. And it was like almost guaranteed and it was risk free. And it's like the wool is pulled from our eyes and we're like, oh, actually, wait a second. There is no asset, but truly is risk free. So we kind of have that. The reason why I bring up the importance of just awareness of bubbles happen. It's because we're human. It's part of human nature. Everybody wants to get rich. Everyone wants easy money. So one of the things we have to work with is like, well, are we in a bubble on something? And maintaining discipline and having an investment philosophy that wouldn't allow you to get carried away. Because one of the greatest stories, I think, in the markets and in investing comes with Sir Isaac Newton, in which he got caught up in the South Sea bubble, in which he even knew early on that it was a bubble and decided to pull his money out. But then the demand just kept pushing higher and higher and higher. And he's like, oh God, if I had just stayed in, I would have made all this money. The position had moved so high. And so he felt compelled to get back into it because I can't miss anymore. And so he put a big chunk of his family's fortune into the South Sea Company at the height. And then shortly after that, kaboom, the bubble popped. And a good part of his fortune was lost. And so he has a great quote, and I'm going to paraphrase it here, but it's like, I can understand the movements of, the celestial stars in the sky, but I can't understand the madness of men. Like I'm clueless. I have no idea what to make of that. So I bring all this up as to like, how are you maybe to understand bubbles and how are you to maintain discipline and how are you to not get caught up with it. Because if a certain asset class is really doing well and it seems like, oh man, we're missing out, there can be this tendency, this compulsion almost to go and dive into it and put all your money because this is it. We're going to make money. And it's like a siren's call. It's like you can't resist it. And so that's just why you need an investment philosophy statement to keep you grounded and to allow yourself. Maybe this is one of these ironies, like to allow yourself to miss out and for that to be okay. That's what'll preserve and keep you from bubbles, allowing yourself to miss out and saying, that's all right. Our plan works. We don't need to get caught up with this frenzy. And in fact, maybe getting caught up with this frenzy is eventually going to be detrimental to us. Warren Buffett has a great quote to help keep us grounded. Be fearful when others are greedy and greedy when others are fearful. Again, as a clear sign that a bubble is in play is where people feel certain that all you can do is make money on this asset class. Hope you found this to be helpful. Keep this in mind as you're considering your own investment decisions. If you're looking for someone to help kind of walk you through these considerations and help me maybe to keep grounded and having a philosophy and approach that doesn't get moved around in the changing times, why don't you reach out and consider giving us a call? We'd love to connect and work with you. Thank you so much.